Very good afternoon, everyone. Welcome to uLaw's webinar. In today's topic, we're going to be covering about a legal office's expense management. We're going to talk about the two broad categories of expenses that a legal office would encounter. We're going to talk about, on one side of the business, you have disbursements or the client-related expenses. And of course, on the other side, you have your office-related expenses or business expenses to keep the lights on, to run the office, the law office. So we're going to be covering the differences between these two types of expenses, how do you manage and maintain these two different types of expenses, and the expectation from the Law Society in terms of how you represent the documentation that goes supporting the capture of this data across the life cycle of your business. Now, today's webinar has been accredited for 1 hour of professionalism CPD credits. I repeat, it's been accredited for 1 hour of professionalism CPD credits in the provinces of Ontario, British Columbia, and New Brunswick. So again, request you to log in into your individual Law Society portals, and the title for today's webinar is Law Office Expense Management. So that's what you would use as the title to log the 1 hour of CPD professionalism credits. Okay? Like every other uLaw webinar, today's webinar has, again, a specific agenda. As I mentioned earlier, we're going to talk about the key differences between disbursements and business or office expenses, and then a deeper dive into what are disbursements, how do you manage them, and we're going to touch upon the concept of paying disbursements through your trust account, and really talk about some of the key benefits that you as a legal firm derive by managing disbursements paid out of trust account. Why not do it all from the trust account itself? And then we'll talk about the other opportunity if you do not have a trust account or do not deal disbursements out of trust account, and if it's dealt through a general disbursement, then we'll talk about the different types of expenses that you can log as a general disbursement and what opportunities you have to utilize trust-related disbursements. And coming down to the expectations of the Law Society, we'll talk about the journals and the documentation that supports the capture of these data points, such as your fee book. And then we'll move on to the business or office expenses and how would you manage those business or office expenses. Examples such as the rent, any interest or bank charges, salaries, printing and stationery, etc. That are expenses that you really cannot relate to a client. These are expenses such as rent that you would have to pay as part of your office expense, but it is still a data point to, let's say, your general account. If you're paying out of your general account, it's still a data point, and we talk about how those data points are captured in very similar ledgers and journal documentation. One such important document would be the expense book, and we'll also talk about how you can utilize the various analytical capabilities that the data points offer to make better informed decisions about your business and the expenses that you incur. Okay? Once again, I kindly request you to mute your phone lines and use our chat window that you see on the Join Me tool to ask any questions that you may have specific to today's webinar topic. Our support staff would be available to answer them as soon as they receive them. And before I get going, for those who just joined in, today's webinar on Law Office Expense Management has been accredited for 1 hour of professionalism CPD credits, and the title is Law Office Expense Management. Okay, so let's get going. What is a disbursement? We really want to start with a key definition, both in terms of accounting principles as well as from a layman's perspective of what that disbursement means, right? So really it's the act of paying out or disbursing money, really where the word is derived from, to run business cash expenditures, etc., that the legal professional would have to pay out in connection with a specific client transaction. Okay, so in layman's terms, it's really expenses that your legal firm has incurred for a specific client, and I'll go one step further to say for a specific file or a matter on behalf of your legal office. Okay, so expenses incurred for your client by your law office. And then from an accounting perspective, really it's a matter of the need for your legal firm to record that particular transaction of that expense that occurred in the books so that you can balance the accounts when you spend it to begin with, generate the invoice, and then recover the expense. That obviously is in the case of a general expense or general disbursement. Okay. From a law society perspective, what that really means is they require you to capture the data, to report that data in a meaningful bookkeeping perspective. Okay, so we're going to talk about the different documents that they expect that reflect these data capture points. Okay, so bottom line, from a disbursement perspective, these are expenses incurred by your legal firm on behalf of a client, more specifically on behalf of a client's file. This could be examples such as the court fee, the application fee. This could be any travel mileage. This could be any specific disbursements that you have signed up or it's part of that retainer agreement or that engagement agreement that you and your client have agreed upon, right? Okay, on the contrary, let's define what that business or office expense means. Again, it's the act of paying out money to run a business. Examples such as rent, buying computer or furniture, any cash expenditures, dividend payments, and expenses that a business might have to pay out to run the overall business. Specific to this case, it's to run the overall legal business or legal firm business. From a layman's perspective, these are the expenses that the legal firm incurs to keep the lights on to run that legal office. From an accounting perspective, the bottom line is that you still are required to track this in the books to balance, especially if you're dealing with taxes. Okay? So, especially if in the provinces of Ontario or others where there's, provisional taxes and other provinces as well. In Canada in specific, you have the opportunity where you collect tax, again, depending on your firm, and if you have a jurisdictional tax number, if you do collect taxes, you, of course, do pay taxes in the majority of provinces for expenses that you incur, right? So it's the act of also being able to equate the taxes received from clients and the taxes paid on behalf of office expenditure, okay? Now, what's that one significant difference between a disbursement and a business expense? So we've kind of established that a legal firm has the need to manage these two different types of expenses. One is a disbursement, which are, let's just call it, client-related expenses, and on the other side you have your business or office expenses that are meant to run your office, okay? And what's the key difference is the fact that disbursements or client-related expenses by nature are recoverable, okay? We're hoping that when you sign that engagement letter, you make it very clear that any expense that your firm pays out on behalf of that particular execution of that client file, that the client's responsibility is to pay that money back. Either that, or you could use the retainer and accept the overall legal fees along with any disbursements that you anticipate to pay out in executing that particular file, right? And accept that as an original retainer to begin with. And we're going to talk about such examples and how that sometimes really helps legal firms having to deal with paying out money up front and waiting a long time to recover that expense, right? But fundamentally, as a difference between disbursement and business expense, disbursement is something you should expect as a recoverable expense that you hope to get paid back by your client, right? So why track them? That's the really next question, is the fact that you can actually recover this expense from the client makes it even more important for your firm to track it so that you can record, showcase it in the form of an invoice, and use that as a formal document to show your client and expect that money back, right? Because yes, there is a fantastic engagement letter or a retainer letter written, but it's your responsibility to track them, document them, and provide it in a timely manner as agreed upon in the retainer or engagement letter, so that now you can expect for your client to measure up and take responsible action of paying them, right? Now, the other aspect of, obviously, from an office expense is the need to capture the taxes, right? So first and foremost, if you don't track the disbursements, you don't know how much to get paid or recover, right? It becomes harder for you to go back to your bank statements, not knowing which transaction was meant for which client. And if you don't track the office expenses, on the other hand, it's going to be harder for you to manage all the taxes that you may have paid, which really affects your profit margin, right? Because revenue minus expenses really gives you the profit or loss, and many times corporate taxes are based on the profit loss, and there's a percentage that's calculated on the profit and loss, right? So if you really paid that expense but have failed to capture it and have no clue of it, then you've lost the opportunity of reporting it as a business expense, including the taxes that you paid. So that's why keep in mind that it's equally important to track your office expense as it is to track your disbursements as well. Okay? That's really the highlight of this particular slide. That's really important that you have a process or mechanism, whether that's using a legal accounting software such as uLaw or other legal accounting software, or if you're using a manual system, if you're writing it down on a piece of paper, you're using a third-party software, whatever it may be, keep in mind that these are two different types of expenses, and they are both equally important to be tracked. Okay? All right, so now that we've kind of established some ground realities of these types of expenses, let's kind of take a deeper dive into quickly looking through what entails into what a disbursement means. We're going to spend the last 15-20 minutes, and based on time permitting, to use uLawPractice as an example of how you would go about managing and entering and capturing these disbursements and the different documents that these data points are captured and reflected in. So I want to go through these slides real quick in the next 15-20 minutes so that I could spend the last 15-20 minutes if possible actually showcasing to you how we would enter the disbursements and office expenses. Okay? So how do I manage disbursements? What are some of the key steps to keep in mind? Okay? Whether you're paying this disbursement from a trust account directly or whether you're using the general account that you've signed up. Of course, a legal firm, assuming has both a trust account and a general account, has the opportunity to pay for disbursements from both these accounts. But regardless, some of the common aspects that you have to keep in mind is being able to record the disbursement and when that was paid, how was that particular disbursement paid, and what was the specific reason for that expense. Okay, so let's start with really fundamentals of that transaction. When was this disbursement paid, right? What particular date? How was it paid? So did you pay this out of your general account? Did you pay this out of your trust account? If you did pay it out of your general account, did it come out of your general bank account? Or did this come out of your business credit card? Or sometimes you may have paid this out of your own pocket, right? So that could be another example as well. of a general disbursement where it really did not come out of the business accounts at all. Let's assume you were at the court and you forgot to bring your wallet and you just had like 100, you only had your personal debit card or whatever with you, and you actually paid it on behalf of that client file, on behalf of your legal business, but paid from your own pocket, then not only should you be able to recover that money from the client, but you should recover it and then pay yourself as well. Right? So it's really important really to capture how it was paid. And of course, it's important for you to track it at a granular level. So we're really trying to understand what was the reason for that expense. This makes your, what they call as a reconciliation at the end of the month, that much more simpler if you have captured all these details, right? Reasons such as it was a court fee, it was an application fee, it was an agreed upon travel mileage, it was an agreed upon fax expense. Whatever that disbursement reason is, it's, again, make it a process and a protocol to be able to capture that, okay? And then comes a more important aspect that you need to keep in mind, again, whether that's trust-related disbursement or disbursements paid out of your general account, and that is the specific client name and the matter or file name or number that this disbursement is related to, right? So this is not a random court application fee. This is a court application fee paid on the 21st of March using your general account for the specific client for the specific matter, right? That's what's important. Now, if you're paying this disbursement right out of your trust, if you've already accepted a retainer that includes the cost of that disbursement, and fantastic, you really do not have to generate an invoice to reflect, when you still reflect it in an invoice, but you don't have to generate it and showcase it to recover it and wait for the payment. If you have used your trust as a way of paying disbursement, and if there's money in the trust to do so, then you can actually pay for it and the money is taken out of your trust. But if you're paying this out of your general account, then there's some additional steps that you have to take. And that is, you do have to generate an invoice. Okay, that is the formal document that really outlines and captures and documents these disbursements, including the time, rather the day, how was it paid, what was it for, so that your client knows specifically that this was an agreed upon disbursement. And not only that, you also decide when do you send this invoice. We've spoken about this in some of our other webinars. It's important for you as you plan your retainer or your engagement to really be quite sure of when you include your invoices, whether this is as and when it happens, or if you're dealing with corporate clients, is this a quarterly or a bi-weekly, monthly, whatever is that particular time period or cycle, that's an expected agreed upon cycle in which you generate and send these invoices. So what that really means is if, let's say, you have agreed upon on a monthly invoice cycle to be sent out, then you capture and track these disbursements, but make them part of the list of items that would go on that monthly invoice. So you don't generate it as and when it occurs. You capture it as and when it occurs, and then generate it on that monthly billing cycle. Or if it's agreed upon that you generate the invoice as and when it happens, then that's fantastic. You track them, measure them, and any given next opportunity to generate that invoice it, and ask for that money to be paid back, which is called the recovery component. Okay? All right. So how did you spend that money? So we spoke about that. There are two different opportunities. Why not pay straight from trust, and the other one being paying from general. So this is a slide that we would like to give you as an example of types of expenses where typically the money is really not yours to keep, and these are great examples that you could pay for these disbursements right off the trust. Okay, so such as court fee application fee or kinds of fees are easier if they're paid from the trust account, because when you pay it out of your trust account, you don't have to technically recover it because you're not waiting for the client to pay you back. It's already part of that initial retainer. So that's the money that you're taking out of the trust account from that original retainer that the client paid, right? And we believe that, court fees and application fees, these are expenses where you cannot just increase the value of these fees, right? It is what it is. And if it's not your money to begin with, why not use the trust account to reduce the amount of extra work that your firm would have to do to recover that expense, right? Because it really does reduce that amount of bookkeeping required, which is really that extra step of having to, pay for it in advance, wait for it before it gets paid back. And we've heard stories where you've paid for an expense and then you have to wait 3-4 months before you get that money back. And of course, you have to then deal with your finances of having either paid your credit card or otherwise for these expenses that you've already incurred, right? But if you still have to pay from the general, obviously there are always some advantages to that. We have heard from legal clients, sometimes they do use certain cards or credit cards that earn them, miles or airplane points or things like that. If that is something that you're into, again, that's a subtle advantage that you do have to having paid for it first and then recovering it later. But keep in mind, whether that's trust or general, in our previous slide, we looked at some of the common components of data elements that need to be captured. That included the date, which included the property taxes with the amount, what was the reason for it, which specific client and matter or file number was it for, right? And as we discussed earlier, if this is coming out of your general account, it's really important to categorize whether that was paid using your business account, maybe a business credit card, any accounts receivable, could have been anyone else in your firm who's paid it on your behalf, wherein this firm would have to pay them back, or if this is actually coming out of your own personal money. Okay? That's something very important that you keep in mind, even more important to track when you're paying disbursements out of your general account. And we have discussed this in our previous conversation, which is also make sure that as part of that retainer engagement letter, you're very particular about how and when you recover that disbursement, whether it's a agreed upon cycle or it's something that you would generate through that invoice as and when it happens. Okay? Now here is a good example of some types of disbursements and some good candidates that you maybe want to keep in mind as you consider paying these disbursements from either trust or general. So traditionally, if you're looking at, billable, such as the court fee or application fee, we consider, as I said, both the trust and general accounts are very good candidates that you could use. If it's a mileage, travel time, or expenses such as unit rate, then general, is a better example to use, where you actually pay for it up front and then recover it through that generation of that invoice. But if I were to just boil it down to two, I would probably bring it down to the recovery of expenses. So really, if the recovery of expenses are on actuals, so you paid $100 and you're asking for $100, trust would be a fantastic option if you can utilize that retainer and that trust account. But if you do not have a trust account for many reasons, then you have the opportunity to use general, in which case it's a recovery of expense with either a profit or a loss margin. Okay? So if it's on actuals, use trust. If there's a bit of a profit or loss margin that you anticipate out of that disbursement, then only use the general account. I think we're kind of ending the slide share with regards to disbursements. So now that you find or you've devised a way or a protocol to capture these disbursements, and now you've devised a way to use either your trust account or your general account to pay it from, and you've also devised a mechanism to capture all the aspects of that transaction, the details of that transaction. Now it comes down to what documents do you have to generate to showcase the existence of these transactions during an audit or during the compliance documentation that you're required to prepare. Documents such as disbursement ledgers, disbursement journals, these are reviewed. If you have a trust account, it's reviewed both from a trust and a general account perspective, right? So that's a trust disbursement ledger, trust journal, general disbursement ledger, and the journal for general account. The fee book, the appropriate taxes captured, need to be showcased. Okay, and I know we've got some examples taken out of the bookkeeping guidelines of the Law Society, but we're going to quickly share some of these examples when we walk through a uLaw example next. All right, so I think we've spent a good 15-20 minutes just talking about disbursement, so hopefully this was your time well spent. You know, for those who already know this, again, this is just a reiteration of what you know. For someone who's new, just getting started, hopefully this, was able to drive home the message about disbursements and the key components that you need to keep in mind as you plan to capture disbursements, track them, measure them, and definitely make sure that you're recovering these expenses. Because the last thing you want to do is lose money on expenses that you paid up front and you're unable to recover it from the client. Okay? Because that's really going to eat up your, it really becomes an office expense at the end of the day and eats up your profit margin, right? And it becomes an expense that originally should have been recoverable, but now it's not. So ensure that as much as possible, if you can, utilize the power of the retainer and the trust account. But if not, please make sure that you're tracking them, generating those invoices, sending them in a timely manner, and following up to get paid. Now let's look at the other side of the fence, which is really expenses related to your office or your business. Okay. Types of expenses from an office or business. Again, this is fairly simple, straightforward. As entrepreneurs or business owners, you probably already understand the nature of these expenses. Okay, so office management expenses such as furniture, you're purchasing furniture, stationery, whether that's a printer, paper, pens, whatever it may be. Could be marketing, set of collaterals, marketing set of expenses. Most definitely from a legal standpoint, the Law Society fees, the jurisdictional fees that you pay to the Law Society. It could be any other specific insurance fees that you may have, your phone bills, advertisements, promotions, we spoke about that, marketing. And again, there could be various categories of office management expenses that you're already privy to. Other types of expenses include rent. Even if you're sharing with a colleague or a partner, if there's a specific percentage of the overall rent that you're paying, it still needs to be captured. Any maintenance costs, corporate taxes that your business would have to pay, it's an expense. Salaries, if you're starting to grow as a firm and starting to employ individuals and you need to pay them their salaries. Any charges that the banks impose upon you to hold up a certain amount of money in a bank account. Bank charges could be expenses, even including expenses to pay back borrowings. Okay, but a good majority of categories come under the office management expenses, of course, rent. Okay. So we've spoken earlier about how do I capture the details of a disbursement. Now let's talk a little bit about how do I capture the details of an office expense. Okay, so how to record them and when and what to record. And this is a simple I would say a rule that we talk about at uLaw to all of our clients in all our webinars. The best way to capture any transaction is to capture them as and when they happen. Okay? So ensure that you capture the same piece of information that we captured, some of the commonalities. Let's talk about that first. And of course, we'll talk about what's different between a disbursement set of details and office expenses. The date of the expense, similar to your disbursement. So when did that particular expense occur? The office expense. Right? What was the title, or you could give it a brief description. Again, helps you with your reconciliation. Okay, so for those who just joined us a bit late, this is a 1-hour CPD professionalism webinar, and the title is Law Office Expense Management. This is being recorded and will be available on our YouTube channel next week. Okay, we spoke about the details, so we capture from an office expense standpoint the date of the expense, name or title, so such as gas expense, or it could be purchase of a laptop or a MacBook. Type of expense could be, again, you could have different categories. You could call it computers, you could call them stationery. That's totally left to you how you manage these expense categories. Make them meaningful that you can always think about. The total amount. And the reason why we say total amount is because there is obviously an amount that is pre-tax, and then there's potentially a tax depending on where you purchased this expense. If you purchased it in a different state or province where there are no taxes, then you need to capture them as well as an expense with no taxes. If you've paid taxes, if you've purchased that MacBook at a local Best Buy in any of the provinces in Ontario and you've been charged that tax, you obviously have to capture the taxes paid. So if you've paid that in the province of Ontario, if this was a $1,000 laptop and you paid 13% on that, that was $1,130. The total amount is $1,130. The pre-tax amount is $1,000, and $130 is the taxes paid. Right? Then comes the method of payment. Again, we spoke about this briefly. This, again, from a general account perspective, similar to that, it's important to capture how you paid for this office expense. Right? Did you pay this out of your general bank account? Did you pay this out of your credit card that you use for all of your office expenses? Now we have legal firms or legal professionals that have 2 business credit cards. If it suits you, and if you're able to have 2 business credit cards, it helps to keep one for disbursements only, and there could be another credit card, again, a business credit card that you could use specifically for your office expenses. Makes reconciliation simpler, right? One would have all the expenses with client information on it. The other one would have all expenses with just the title and description, because you know for sure if you paid using that RBC Visa, then it's, for example, it would be your office expense. If you're using a TD Visa, as an example, it would be your disbursement, right? Something like that. Or if you just have to manage one, keep in mind then that particular reconciliation, you would have to ensure that there's a description, and if it's a disbursement, certainly needs to have client and matter information. Okay. We also want to capture who you paid this to. Again, makes that reconciliation simpler. In our previous example, we would say this was paid to Best Buy Canada, right? How was it paid? Was it from a general business account, credit card, or we spoke about it, owner's pocket? If you paid this out of your own money, but on behalf of your business, then you expect the business to pay you back, right? So you certainly want to capture it if you paid this out of your own pocket. All right, so we're definitely going to go into a quick demonstration after I complete my slide share of how you would record both transactions from a disbursement perspective as well as an office expense. Okay. So now that you've captured all these office expenses, what are the documents that you need to keep in mind to reflect these transactions as you capture them? Expense book. So that's a common document between your disbursements as well as your office expenses. The jurisdictional payable, taxes payable statements. The expense statements. Now comes specific to your office, the profit and loss statement and any borrowings report. Okay. So we'll talk and we'll briefly demonstrate this as to how you capture this information across these documents. And last but not the least, when it comes down to both client-related expenses and office-related expenses, an important thing for a solo practitioner, a growing small firm, or even any firm of that size, an important aspect to keep in mind is to stay on top of these expenses, measure them. Obviously, you've now figured out a way to track them, but it's important, equally important, that you find a way to measure them and make informed decisions, smart business decisions based on what you've analyzed from the measurement of these transactions. For example, if you start to track, record, track, measure, and do the analytics on the rent that you've been paying, and let's say you're comparing it from the previous year to this year, and if you see a discrepancy, and if you really see that for whatever reason the rent that you're paying is maybe another $2,000 extra compared to last year, and if that's something that you're not able to deal with from a financial standpoint, the fact that you're able to measure it gives you the power to make an informed decision about it. Because if you're not capturing it and if you don't know the real data or the truth behind the data, then it's going to be harder for you to make such smart business decisions. So the analytics that, again, specific to whether you drive this manually, drive it through a legal accounting system, having an analytical engine or a process or a method or a software to give you these really empowers you as a business owner to make those smart decisions. Okay, really allows you to stay on top of the health of your business, and you have the comfort with the advent of technology today to be able to stay on top of all these expenses on different time periods. It also helps you to keep a tab on any top expenses or offenders that you have to deal with, and allows you to, as I said, reduce or optimize any expenses that you incur as a business. Okay. So with another 15 minutes left in our CPD, let me now shift gears to really help you visualize what we've seen over the last 45 minutes, which is, again, a quick recap, if you will. Law office expense management. We spoke about the two different types. On one hand, you have disbursements that are client-related expenses. On the other hand, you have your office or business-related expenses. There are specific needs and importance given to the capturing of both these types of expenses. We spoke about the need of the hour being capturing it as and when it happens, the details that go behind capturing these different types of expenses, and the documentation that you need to provide to support the tracking of these different types of expenses. Okay, so now let's try and just visualize this in a very pragmatic sense of utilizing uLaw as just an example of legal accounting software that really can give you how you can capture both these different types of expenses. Okay, I'm going to quickly shift gear and jump into a playground account that I have for my uLaw. So what you see here is the uLaw product. We're a Canadian company. We're legal accounting, practice management, and a business accounting software. I'm going to start off with the disbursements. We spoke about capturing disbursements And we'll take some quick examples now that we have some time. Let's take a client and let's maybe create a couple of matters, one with a retainer and drawing disbursements out of the trust account, and another quick example where there is no trust involved and we're basically just using to pay disbursements out of the general account. Okay, and we'll talk about how you manage both. And then we'll jump into taking one or two good examples of how you could capture office expenses as well. And then finally, we'll finish off with showing you all the documentation and the reports that you would have to make sure that you generate to be audit ready at all times. Okay? All right. So let me start off with creating a client. So we talk about disbursements being client-related expenses. So let me first start with doing a simple client intake, and I'm just going to create a file for that particular client. So as a first step, let me go ahead and add a new client. The uLaw, we're just capturing this as a simple client intake form. And let me see, this is Harvey Thompson. Okay. We'll say this is a family referral. We'll put in a quick communication address. And let me just save the piece of information. Of course, I could have added a phone number, an email address, and you could also use the uLaw app on a phone using the app iOS or Android devices. But I want to get to specifically talking about the disbursements. So now I've done the client intake, and I'm going to create a file for Mr. Thompson. Okay. And I'm going to click on the Matter button so that I can start to create that new file. So here's Mr. Harvey Thompson's information. Of course, you could quickly do a conflict screening and some of the other things before you create a file. But for the purpose of time, I'm just going to go ahead, click on the Matter button. So here's how you do a client intake. At least in uLaw, you can extrapolate this to your own personal situation depending on what system you use or method you use. We'll give it a simple title for this matter. And I'm just going to call it a small claim, slip and fall. Now let's start off as an example where we're going to be asking Mr. Harvey Thompson for a retainer. Okay, so let's assume we understand, and this comes with time. If you're a legal professional who has a fair bit of experience doing small claims, and you kind of understand that, let's assume there's a court fee involved or an application fee involved, right? And you do have a trust account, and you really want to utilize your trust account and ask for a retainer. Let's assume your legal fee is $500 plus tax, okay, where you are capturing tax, and you pretty much know that there's a $100 court or an application fee. So you're basically going to ask for $500 plus tax. In the province of Ontario, it's $565 plus $100 for your disbursement. So we're accepting $665 as a retainer. So let's take that situation. I would go ahead, of course, you would sign up the retainer agreement. We have quite a few samples for retainer letters, but let's say you've signed the retainer letter and the client has paid you $665 in retainer money that you're now depositing into your trust account. So now it's a matter of capturing that into the system. Okay, keep in mind this could be any system that you currently use. In uLaw, there's many ways of doing this. Just go ahead and say this is a new retainer. And could go back in time to say this was yesterday. I'm going to capture it as 665 as a check and provide him a receipt. I could collect this using a credit card. If he has a credit card, I can just validate that credit card, ask him for the credit card then and there. Okay. Makes it simpler. Or if it's a more traditional check-based payment, you basically tell us what the check number was, again, for purposes of reconciliation, right? And give them a retainer receipt. Very, very important document, that of a retainer receipt, so that you can sign it off, the client can sign it off saying it was the $665 that was agreed upon, that included that $100 fee, instead of the client coming back saying that they paid you $6,000, for example. All right, so now that you've paid, right away you see there's a bit of a dashboard aspect to it. We captured the trust receipt, $665. There's a projected balance. This is not really the exact balance that's in the bank. This is projected balance as far as what we know about the transactions received in uLaw. And the reason why it's refund is because if the person were to non-engage you, or you were to non-engage the client, not knowing that anything else that you've done, that's the amount you have to refund back to the client. Okay, so let's say you go about your docketing, and we're just going to say one simple docket. I'm going to say final closure. Actually, let me just quickly run through this initial meeting. Okay, I'm just going to give it a quick set of descriptions. I'll be on top of my time as well. I'm not going to charge by docket. Let's just assume that this was a flat rate docket. I'm going to say document drafting. Okay. And I'll make this a flat rate 0 so that you see a difference between the two representations. And then finally, I'll say final closure, application method. Yeah, I'm just making this up. This is a typical cycle, and let's just toggle by using this little arrow, and I'm just going to call it $500. Okay, so now you have captured the legal fee aspect to it. Now let's come down to the disbursement aspect to it. Okay, to capture the disbursement, so far you've got 665, and you've kind of said that 565 worth of fees are now locked. If you were to generate that invoice, you are able to do the trust transfer, and that's how you recover the money if there's a retainer involved. If there's no retainer involved, then of course you're waiting for your client to pay you. If there's a retainer involved, you generate the invoice, you unlock that eligible trust amount that you can now transfer and make it yours. Okay? But for the purpose of today's webinar, let's talk about the disbursement. You can see where it says disbursement. And really, let's say that this was a disbursement that was withdrawn from trust. Okay? Directly out of trust. You've written them a trust check. And this happened today. And let's just say this was for $100. So we've captured the date. We've captured the actual amount. Who was this for? So we know this is for Harvey Thompson, specific to his file for small claims. And let's say you're writing a check, and this is a description, which is really what is this about. So we've captured the when, how much, how was it paid for. This is coming out of your trust account, of course. What was the check number? And now the capturing is a description. So we'll say application fee. And who is this paid to? So Ministry of, this could be Finance, Ministry of justice, whatever it may be. Of course, coming out of the trust account. So this is where you can capture the real life bank account and really use that to mirror which account was dealt with and where should this money technically be leaving from. You could even print this check if you like, if you're just getting started out of uLaw, so you don't have to handwrite this check. Okay? So now, through that little data capture, so that really is the moment of how you captured that particular disbursement of an application fee now which is getting paid out of your trust account. Okay, and here's the check. Fantastic. Now if I were to generate a pre-bill, let me skip that. Again, I have another 10 minutes. Let me skip that and I'll jump into an actual invoice. I'll say complete. But we do recommend that you do a preview prior to sending them out. You can even mark this as paid because there's really no more money for the client to pay you. Choose the date and you generate the invoice. In the meantime, let me show you what that check looks like. You can see this is drawn out to the Ministry of Finance for $100, and you've got the main check area and the details at the bottom, the remittances rather. And here's also an example of a retainer receipt that clearly tells that you had received $665 through that check 445. Okay. Let me generate that invoice. As soon as you've generated that invoice, you've kind of unlocked that $665 to be made as your money. Okay, so even if you have money in trust, it's still not yours to be made unless you have reflected the effort and the disbursements in an invoice. Okay, so here's all the information about your dockets, 565, and now you've got the disbursement that you've captured coming out of your trust accounts. You've got 665 coming into your trust. 100 was taken directly out of that trust, and hence what you now have to pay yourself and move money from trust to general is not 665, but it's 565. Okay, again, this is a compliance aspect too. By clicking on the question mark, it clearly tells you that the pending trust transfer is not 665 because the $100 was already withdrawn directly from trust for that disbursement. Now this would reflect in the journals and ledgers as money taken out of the trust account and not the general account. Okay? That's one important difference between paying out of trust, and we'll talk a little bit more about a similar exercise from a customer where you're paying out of your general account. Okay? So here's that 565 that you're transferring from your trust, and let's assume it's your general account. And of course, if you do an electronic fund transfer of moving, if that's how you move it, for friends from the province of Ontario, we also fill out a Form 9A, which is a document expected by the Law Society here in Ontario for you to fill out. Okay? That's pretty much it. Now let's take a quick example for the same Harvey Thompson. And let's do another matter. I'm just going to say action. Let me jump back into the matters. I'm going to create a new matter, and let's just call this a matter. And I'm going to say this was a expense issue. And this time I'm going to say this is I'm accepting 565 as the retainer because I did not plan for the $100 to come out of my trust. Okay. Same thing. So let's assume there's a retainer. If there's no retainer involved, of course, you would do all the work, you'd do all the disbursement, generate the invoice. You would not do a trust transfer. You would just accept a client payment. Okay? Okay. Actually, someone's actually asked for that example. So if you wouldn't mind, let me just do that. There's no retainer involved. Let me just go ahead and say final closure. This is for $500. Oh, that's what pretty much happens when you're pressed for time and you have butterfingers. Okay, just going to say 500. So let's assume the legal fee remains to be the same, eh? I'm just not going to docket all of that. I'm just going to say 500. At this time, instead of paying for that disbursement out of my trust, I'm just going to pay it out of my general. Okay, so I'm going to go into disbursement to add new disbursement, and now instead of trust, this time I'm paying out of my general. So let's say this was basically, again, same thing, actual, and I'm paying for a court fee. Traditionally, these fees are tax exempt, so I could say tax exempt, and again, capturing very similarly who this was paid to. Okay, and how was this paid? So this could have been my general account. This could have been where I paid this out of my own pocket. This is exactly what I said. You need to really categorize how you paid for this expense. Let's just keep it simple and say this is paid out of my general account. And again, I wrote a check. Yeah, I could have paid this out of my business credit card and said it was a credit card, but we have different methods to capture. And I'm just going to go ahead and put that court fee of $100. Now that money is not coming right off any trust account. There's no retainer. This is where you have to generate the invoice and now recover that expense already paid through a client payment. So you basically call your client and say, I've generated this invoice, and based on your payment cycle, you follow up in the next 15, 20, 30 days and ask for that payment. Okay? So very important that you still generate this invoice. And this is a kind of a two-step process in uLaw where you actually generate the invoice and you download the invoice so that you can email this or print this and sign this. Okay? So this is where the invoice has been sent. The client knows it's the same 665. Now you're calling them and they pay you. You basically accept it as a client payment. Accept client payment. Pay through that check. Hopefully deposit into general account. Now you can see if there are multiple matters, you can even split that money across matters. But this time we're just going to keep it to the fence issue. Give them a payment receipt if you like, but then go ahead and do this. So with just a few more minutes left, let me just quickly showcase to you how you would enter an office expense and then the quick journals and ledger reports that you can generate. Okay? Now, being a business accounting software, uLaw captures office expenses as well. So let's take a quick example of Law Society fees. Basically, go into Accounts Action, and I'm going to say Office Expenses. This is where you can create your own set of categories. You could say Law Society of Ontario, and let's say this was an office expense, so this is not a client-related expense. This is specific to your office or business. And you could say March 2019. $300. Now you're basically capturing the pre-tax and the tax paid. Now you've paid this out of your general account. Some of that. Okay. Now if you start to generate these expense documents or the compliance-related documents, you're going to start with the trust receipts, disbursements. Okay. Let's start with the expense book. I'm going to do that for the month of March. Now by entering all that data in, here's how we've captured the expenses, either both by date, specifically for the client that was dealt with. If this was an office expense, we'd call it an office expense. So in our case, let's look at our friends, Mr. Harvey Thompson, where we paid the court fee of $100. And then there's this office expense of an LSO fees that was paid. And we've also captured the corresponding taxes. Okay? If I were to capture any general disbursements paid, and the trust ledger. We said how important that was. All documents that you need to generate, especially in the case of a legal accounting software, once the data is in, it just makes it simpler and easier for you to generate these documents because it captures it in a way that makes the ledgering that much more simpler. Okay? So we looked at the LSO fees and also the Ministry of Finance where we paid the court fee for Mr. Henry Thompson. Okay? And last, let me show you the trust ledger. And keep in mind that a trust ledger is for a date period for all the matters involved. So for Mr. Harvey Thompson, you could see that the $100 of the original disbursement that we did for the slip and fall is a disbursement paid right out of the trust account, and that's why as of 22nd, it was only $565, and then you did the trust transfer, making the trust balance zero. And if you're capturing taxes and paying taxes, one step further is also being able to report those taxes. Okay, if you were to come down further, you've captured and paid. So we looked at where you've paid this LSO fee tax of $34.51, but we've also captured the taxes received from your clients, telling you in totality how much of tax you owe the government for that particular period. So with us going another 5 minutes past, just want to draw your attention one last time to our presentation that this was specific to the office expenses and the disbursement-related expense management that you as a legal firm incur on a day-to-day basis. And really the means for this CPD session was a way to showcase that to those who are not part of any previous similar CPD sessions that you've attended. But again, reiterate that find a way to capture these transactions, whether that's disbursement or client-related expense transactions, whether it's office-related expense transactions, find a way to capture them in the moment, record the details that are specific to these two different types of transactions, and find a way so that you can generate the necessary documents such as journals HST expense book, and ledgers that depict the transactions and the information that's captured in those transactions. Because that's what really the audit is about, is being able to show another third-party person of what's happened with your firm's books. Okay? So hopefully this was a session that was meaningful. For those who have attended this a few similar times, hopefully it's a refresher. I believe you can only use 1 hour of CPD even if you've attended it twice, because it's for the same topic. But I would find a way to reach out to Law Society and confirm that. But in the meantime, we hope you would visit us on our YouTube channel and look at some of the other CPD sessions that we've delivered, which you for sure can make it part of your 3.5-hour professionalism credits. Okay? So once again, I thank everyone for joining me today on this webinar. Have yourself a fantastic weekend, and we look forward to seeing you at our next webinar. Thank you.